how do you generally prefer to find out about companies that are looking for investment?
I prefer to get a referral.
Who are you looking for referrals from?
Actually, from multiple sources, but from seed investments, they often come from my university relationships, because actually a lot of them have been university research technology commercialization.
I would say that for me, it's through my network of fellow angel investors. And it's the resume of the person who is the primary, the primary creator of the business, which does not mean that they have to have a PhD after their name or anything like that. But you want to vet who you're dealing with, because you're going to be placing an enormous amount of trust. And given that I've been involved with CPAM, which is up in Harrisburg, much like Lancaster, that vetting process is usually because there's somebody who knows somebody who knows somebody, and that tends to help build familiarity, so that you're not dealing with a total stranger, ideally.
Going with the land concept, given I get so many of them, there's a software.com out there. It used to be called AngelSoft, now it's called Gust.com. They have a whole application process that helps to standardize the look and the feel of the executive summary, so I can see all the information I want to see right away. But having said that, if one of those gets referred in by someone I know, it bumps to the top of the list. If it's referred to by someone I know that put money in, or another angel group that has part of a term sheet knocked out, and there's a group of people that are interested in putting money in, that goes to the very top of the list. So if someone's coming in that's looked at the deal, done the deal, has money at risk, I'm definitely going to look at it hard.
Since this conference today is about IT, in what ways, if any, maybe there aren't, do you see investing in IT companies as different in any way from investing in other industry sectors?
I think that'd be simple for me, because I don't really understand IT. Not to sound too flippant, but I'd be kidding myself to say that someone could go into the guts of something beyond me being able to operate my desktop. I know my limitations. I know I use websites. I shop on eBay, or I buy merchandise, my family does. So there's no ways I know I interact with it, but I don't want to, the time when I'm going to get hit in the back of the head, when I think I really know something with respect to IT. Now, there are other kinds of businesses that I'm much more boots on the ground with, but that goes back to my dependence on my network and relationships with people that I know are my go-to people to vet projects.
Yeah, for me, there's several reasons, and one is it's much more interesting to me. First of all, just from my background, it's where I started. I was a highly technical software engineer in the days before PCs, actually. I actually do not invest in the social media space. I invest in what you might think of more hardcore types of software applications, more things that delve into the kernel space. Also, it's very low capital cost typically, which I find a big advantage. And besides those, there are often opportunities for earlier liquidation events. I found it a space where you can easily connect with larger companies. You can prove your worth to larger companies, and they become potential buyers of the company. So, I mean, the two that Jill mentioned, Compose and Fingerworks, they went through the downturn 2000 to 2003, They were both in that period, but one was purchased 4.5 years from inception, the other 5.5 years from inception. I find, as Michael was saying, the exit is very important.
I like software for the same reason he does. My background is in design engineering and electronics, and I was trained as a programmer. The PCs were out then, but they were early. But IT is very different kind of investment than healthcare. Typically, there's no regulations involved. There's no FDA that has to approve something. It's not like pharma investing where the numbers are absolutely staggeringly big to get some kind of a drug on the market, but then the payout's also huge. But angel investors usually can't play in that market at all because they're out raising $10 million, not $100,000. And it's very different than manufacturing. In manufacturing, you have metrics you can actually measure to understand what they're doing, how they're doing it, and what the value really is. Software is a much more of a guess. But when you guess right, the payout is much bigger than manufacturing can be because it's multiples, not just some defined ratio that Wall Street understands.
I think to what you're saying, one thing about IT is that you build your product, and whether you sell 100 or you sell 1 million, you duplicate it with ease, and that's an incredible leverage, and that kind of goes to why companies are so drawn to IT investments.
How important is the company's specific technology to your decision to invest or not to?
Yeah, that's a very good question. Company-specific technology. You do mean the startup company?
Yeah,
technology.
when they come to you and they've got a technology,
Yeah.
how important is that piece of it to your decision?
It's not so important to me. I have a certain penchant towards the enterprise space and things that delve into the kernel, to the core of the machine. But outside that, it's not so important to me. One of the company's Fingerworks, it's the thing that is multi-touch in your iPhone. That had hardware, but the secret sauce was all in the software. And what that was imaging software. It imaged exactly what your hand was doing above the surface and then interpreted it. So they come in all shapes and sizes, and the specific technology to me is not that important if it's meeting the other criteria of being in my comfort zone, being commercializable, and something that I could see a route towards liquidation eventually.
Mike?
Yeah, I'd say, first of all, to use IT as the class versus technology is difficult because IT is a hugely broad space. He deals on the enterprise side. There's people that deal with the cloud, which is the internet, and social media, which I'm still trying to figure out. But the technology is important, but I think I'm more concerned about the management's ability to take that technology and do something with it. So the technology can't be vaporware, and it can't be what somebody else is also doing in a different color. But it needs to do something and be reliable. And I usually like to see some proof of concept that it actually works, because it's too easy to say, well, it's going to do this, and it never quite gets there. Because like these guys, we're not actually in the programming space, and I'm not sure how smart the entrepreneur is at writing that code. So I have to take that on faith. That's why I want to see some of it working.
I would say that something that in my experience gets a lot of investors' attention is when you have something that's proprietary, that's either patented or patent pending. But the problem with that is there's a bit of an allusion to that too, because you can end up either finding that you have to defend a patent with a gorilla, Microsoft, some big company, Oracle, and your hopes can be dashed rather quickly. So, you know, that's one thing that gets my attention, but on the other hand, could be an undoing as well. So.
How long does it usually take for you to get from an initial meeting with a company to an investment decision? And by that, I'm usually looking at something that's maybe more towards yes than no, because probably no happens pretty quickly. And related to that question is, what can companies do, if anything, to shorten that time frame?
I'll put my Angel Network hat on for this one. It typically takes our group about 3 to 4 months to get from meeting and hearing the initial pitch to a term sheet that we're all about to write checks on. Part of that is herding the cats called angels, because trying to get them all in a room and their schedules together where we can have an intelligent conversation about what kind of terms we want can be difficult. From the entrepreneur's point of view, is be prepared to be extremely responsive when we ask questions. Don't drag your feet, don't take 2 weeks to get back with us with a P&L. Their attention span will wane real quickly if you're slow at getting back to us.
Yeah, particularly since you know, I do primarily seed. I'm usually not going in with anyone else. So the time frames for me have varied from, you know, knowing within a very quick time period, sometimes very, very quick. Sometimes the first meeting, I knew I was going to do it. Up to, you know, could take a couple, few years. You know, and the main thing to accelerating that is part of what Michael said, and that is, you know, show me something that works. And if it excites me and it's in my space and I see the application, I'm gonna help you. It might be in stages at the C level, but if all those fall together, I'm gonna help you get started.
Time frame, in my experience, has been probably no earlier than about 3 months, and probably to the outside about 12 to 15 months. And part of that is the cat herd instincts of angel investors, but I also know that beyond that, generally angel investors will pick a lead investor, and that's how you go forward. Somebody who understands the space that the investment's being made in, that people know. And then what can really drag it out and is valuation, because that's a back and forth. You can have people, like Tom's mentioned before, who love their company so much that it's just worth, the zeros just never stop. And that, you know, that can bog down until there's a degree of realism that comes in, if ever. It's almost like a real estate deal where you have a seller that just has to get this much money for their property. And that stretches out. And the other thing I would just say, it depends on the attorney who represents the founder. And in my experience, it really helps when you have the founder's attorney as somebody who's accustomed to doing work in startups, so that you're not educating the attorney along with someone who's never done this before either. And that can be quite frustrating. And just about a year ago, went through an endless period of time with someone's attorney who was just making silly requests and demands that were non-negotiable, because that's not what we do. So, just a couple.